Welcome to Financial Fortitude, your ultimate destination for financial wisdom. Are you ready to take control of your financial future? Look no further. Our channel is here to guide you through the complex world of finance. Whether you're a seasoned investor or just starting your financial journey, we've got something for everyone. And don't forget to be a part of our growing community. Like, subscribe, and hit that notification bell so you never miss out on our valuable insights. Stay tuned for a wealth of knowledge on financial fortitude. Let's get started. In this video we will be unraveling the impact of geopolitical events on financial markets and global trade. Geopolitical events have a significant impact on financial markets and global trade. From natural disasters to war, terrorism, and political upheaval, these events can cause uncertainty and volatility in the markets. As an investor or a trader, it's essential to understand how these events impact the economy and the financial markets. In this video, we'll take a deep dive into the impact of geopolitical events on financial markets and global trade. We'll also provide insights and tips on how to navigate these storms to make informed investment decisions. So, let's unravel the mystery of how geopolitical events influence the financial markets and global trade. Understanding the relationship between geopolitics, financial markets, and global trade. Financial markets, including stocks, bonds, currencies, and commodities, are highly sensitive to geopolitical developments. Any significant political event or announcement can trigger volatility and create ripples across these markets. For example, a trade dispute between two major economies can lead to a decline in investor confidence and cause stock markets to plummet. Similarly, political uncertainty or conflicts can disrupt supply chains, impacting the prices of commodities and currencies. Global trade, which involves the exchange of goods and services between nations, is deeply intertwined with geopolitics. Trade policies, tariffs, and trade agreements are influenced by geopolitical considerations and can shape the flow of goods and services across borders. Geopolitical events, such as Brexit or the imposition of trade restrictions, can disrupt established trade relationships and introduce uncertainties for businesses operating in the global market. By understanding the dynamic relationship between geopolitics, financial markets, and global trade, market participants can better navigate the stormy waters of the global economy. Monitoring political developments, analyzing their potential impact on markets, and assessing the geopolitical risks associated with international trade are essential for making informed investment decisions and managing business operations effectively. In this video, we will delve deeper into the impact of specific geopolitical events on financial markets and global trade. We will explore case studies, provide insights from experts, and offer strategies to mitigate risks and seize opportunities in an ever-changing geopolitical landscape. The influence of geopolitical events on financial markets. One of the main reasons geopolitical events affect financial markets is the uncertainty they introduce. Markets thrive on stability and predictability, and any unexpected political or economic developments can disrupt investor confidence and trigger a ripple effect across various asset classes. For instance, when there is heightened geopolitical tension, investors often seek safe haven assets like gold or government bonds, leading to a shift in capital flows and impacting currency exchange rates. Additionally, geopolitical events can also pose direct risks to specific industries and companies. Trade wars, sanctions, or political unrest in a particular region can disrupt supply chains, hinder business operations, and ultimately affect corporate earnings. For example, when trade tensions escalated between the United States and China, companies heavily reliant on international trade faced uncertainties regarding tariffs, export restrictions, and market access, leading to stock price declines and reduced investor confidence. It is essential for investors, businesses, and policymakers to closely monitor geopolitical events and understand their potential ramifications on financial markets. This requires comprehensive analysis and forecasting, as well as proactive risk management strategies. Strategies for navigating the storm. Stay informed. Keep a close eye on relevant news sources, financial publications, and geopolitical analysts who can provide insights into the potential impact of geopolitical events on the market. Stay updated on political developments, trade agreements, and policy changes that could disrupt global trade. Diversify your portfolio. Spreading your investments across different asset classes, sectors, and geographical regions can help mitigate the risks associated with geopolitical events. Diversification allows you to take advantage of potential opportunities in different markets while minimizing the impact of any single event. Monitor currency movements. Geopolitical events often lead to fluctuations in currency values. Stay vigilant and monitor currency movements, as they can significantly impact international trade and the profitability of companies with exposure to foreign markets. By incorporating these strategies into your investment approach, you can navigate the storm of geopolitical events with more confidence and make informed decisions that align with your financial objectives. The role of central banks and government intervention. When faced with a major geopolitical event, central banks often step in to provide liquidity and prevent market disruptions. They may employ various monetary policy tools such as adjusting interest rates, conducting open market operations, or implementing quantitative easing measures. These actions are aimed at mitigating the negative impact of geopolitical events on financial markets and restoring investor confidence. Government intervention also plays a significant role in navigating through geopolitical storms. Governments may implement fiscal policies to stimulate economic growth and support domestic industries affected by global trade disruptions. They may provide financial assistance to affected sectors or implement trade policies to protect domestic markets. Furthermore, governments may engage in diplomatic negotiations to resolve conflicts and reduce tensions. Diplomatic efforts can help ease geopolitical tensions, thereby reducing uncertainties and restoring stability in global trade. It is important to note that the role of central banks and government intervention is not without challenges. Balancing the need for stability with the risks of excessive intervention requires careful decision-making. Additionally, the effectiveness of these measures may vary depending on the nature and severity of the geopolitical event. In conclusion, central banks and government intervention play a crucial role in navigating the impact of geopolitical events on financial markets and global trade. Their actions aim to maintain stability, restore investor confidence, and support economic growth in the face of uncertainty. By closely monitoring these interventions, investors and businesses can better understand the potential implications on their financial decisions and strategies. Government measures to stabilize markets and encourage trade. One common government measure is the implementation of monetary policies. Central banks can adjust interest rates and employ quantitative easing to provide liquidity and stimulate economic activity. By lowering interest rates, borrowing becomes cheaper, encouraging businesses and consumers to invest and spend. This injection of capital into the economy can help offset the negative effects of geopolitical events. Another important aspect of government intervention is the implementation of fiscal policies. Governments can enact stimulus packages that include infrastructure spending, tax cuts, and subsidies to boost economic growth. These measures not only stabilize markets but also incentivize trade by creating a favorable business environment. Trade policies also play a significant role in encouraging global trade. Governments can negotiate and sign trade agreements, reducing tariffs and trade barriers between countries. By facilitating easier access to foreign markets, businesses can expand their customer base and increase their export opportunities. Additionally, governments can establish special economic zones or free trade zones that provide incentives and benefits for businesses looking to expand their international trade activities. Furthermore, governments can establish diplomatic channels and engage in negotiations to resolve conflicts and tensions that arise from geopolitical events. Diplomatic efforts can help ease trade restrictions, promote dialogue between nations, and foster cooperation in the face of uncertainty. Overall, government measures to stabilize markets and encourage trade are vital during times of geopolitical events. These actions provide a sense of stability, confidence, and support to businesses and investors, helping to navigate the storm and mitigate the adverse effects on financial markets and global trade. In our video, we delved into the complex relationship between geopolitical events, financial markets, and global trade. By understanding the intricacies of this dynamic, investors and traders can navigate the stormy waters of uncertainty with confidence. We explored various case studies and provided valuable insights on how geopolitical events can significantly impact financial markets and global trade. Armed with this knowledge, readers can make informed decisions and harness opportunities during times of upheaval. As the world continues to evolve, it is crucial to stay informed and adaptive in order to thrive in a rapidly changing global landscape. Thank you for joining us today on Financial Fortitude. We hope you found this information valuable and insightful. Stay connected with us by following our social media channels, and remember to share our content with your friends and family who might benefit from it. Don't miss our next video, where we'll dive even deeper into the world of finance and provide you with tips to secure your financial future. Before you go, don't forget to give us a thumbs up, subscribe to our channel, and leave your thoughts in the comments section below. We love hearing from you. Once again, thank you for being a part of our financial community. Until then, stay financially savvy and take care.